Hi there, and welcome to today's video. Today I'm going to discuss about how you can deal with randomness in the markets when you are day trading. Before we begin, please note that these videos are for educational purposes only and not to be taken for advice. Mind you that trading in general is risky and that past performance is not indicative of future results. If you need to know more about our terms and conditions, please visit our website at www.estetrader.com. All right, so the question now is, how can you deal with the markets if you're day trading when price is going to be random? It can go up, it can go down, it can go sideways. Now, the goal with trading definitely is to make money. So the question is, how can you do that consistently when you're trading the markets when things are random? So I'm going to use a live chart. I'm going to use gold as an example. So you should be able to see my screen pretty shortly. And here's gold. So there are a couple of things that you need to remember in terms of trading. There's going to always be a buyer and a seller. So there's two players of the game, a buyer and a seller. However, please note that you and I cannot manipulate the markets. We cannot push the price to the upside or to the downside. So the question is, what creates for price to go up or down? Well, the answer is very simple. It is being dictated by news. News will always be the major factor that will create supply and demand. So depending on what the news is going to be, sometimes institutions will already know what the news are going to be ahead of time, insider information, if you want to call it that way. So let's take this one at 7 a.m. Pacific Standard Time, which is 10 a.m. Eastern Standard Time. So there was an ISM Services PMI. The previous number was 60.1, forecasted was 60.5, but the actual number was 64.1. That's almost 4 points. That's way more than what the forecasted number is going to be. Mind you, the word forecast. So when you're trading is simply the same thing, that if you are speculating, then you are in trouble. Remember, you cannot speculate because the market doesn't care what you think based on your whatever cognitive bias that you may have based on perception. On the other hand, if you have a trading edge where you're utilizing a trading system that you can see it and you can read it objectively and you're reacting to it, then you'll have a better edge in terms of making money trading the markets. Mind you, it's all about forecasting. The question is, what is forecasting? You're creating a probability. There's a difference between forecasting and speculating. So by having all these resources, knowing what the news is going to be ahead of time. So like say this one, you have, it's very bearish. Now, if you're selling based on the system that you may have, then all of a sudden, remember, markets are very random when you are day trading, because if you are not aware of the news, so how do you deal with randomness in the markets is by looking at specific news based on in terms of what particular time where they're going to be at. So like right here, there's going to be one at 4 a.m. based on the pound. So basically the UK will have this news and will affect the pound against the US dollar, the pound against the Japanese yen. In the US, on the other hand, when there's going to be US news, it will affect the dollar index, it will affect the indices, it will affect commodities such as gold, it will affect currencies. So I will share with you here that if you are short and it went up and you are not reacting to the markets, and say right here, if you're hoping that it could potentially drop, then you'll be at a deeper hole. On the other hand, someone who is really good in terms of trading, they know that they're reacting to the markets, it's not playing the way how it should be, it's very bullish, they will close the position, take that whatever loss that they may have, they will reverse the position. And if they have really good mental conditioning and they can control that emotion, someone who's highly neurotic will revenge, or they will short, they will buy, the next thing you know, they will panic, they will short it again. But someone who is really good, that can control their own sense of emotion, they can follow their own system, a trading methodology, good risk management, money management, And despite losing on the first game, second game, they'll be winning, right? So knowing as well when to exit, or knowing when to enter with the lowest risk with the highest probability. So randomness in the markets will happen based on whatever news, based on the actual force of price, based on the momentum. See, like right there, looking really good. And if you really have a good methodology and you're seeing here, like, okay, it's approaching supply, I better get out or close at least some of the positions, and you are aware of high impact news, then all of a sudden you see here, if you didn't close your position and you're not aware of the news on what happened there at 7 in the morning, then everything that you basically gained will be lost, and you'll be wondering, or you'll be actually having an emotional regret, the shoots, the goods, the woods. If only I would have gotten out, then I would have made the money. And if I just reacted to it, I would have shorted it, then I would make the amount of more of that money. So who can relate to that? I mean, I'll put my hand out there. I can relate to that. So based on experience, it happens all the time. The thing that you need to really fully understand is that knowing your purpose as a day trader. What is the intention of the trade? What is the purpose of the trade? Of course, the purpose is to make money. The intent is buying and selling within that short-term time frame. You cannot hope that by wanting more, you're being greedy, that by, if you're putting your target point beyond 118.30, now you're going 118.60. Yes, if you have a really good multiple time frame analysis background and your intention is more longer, then news won't really be a factor within that time frame. Yes, we do need news, because without news, then there's no volatility. No one will buy, no one will sell, right? It's like basically a flat line of a heart rate. So that being said, to deal with randomness is that if you can define, you can detect intuitive actual, also using your intuition, that if you can detect that, great, it's running out of steam, is that supply, I better take some money out, boom, and you have a good money management strategy, then you can have more of the consistency to make money day trading the markets, compared to that if you don't have a proper plan and you're just hoping, quote unquote, the word hopium in the markets actually is a dangerous drug. And then next thing you know, whatever you potentially have made is now simply either break even or a loss. And that's how you deal with randomness in the marketplace, by knowing specifically particular news-based or what time it's going to happen, and you have to be there when that happens so you can react to the markets when that's actually happening there and then. All right, so that's how you can deal with that. Mind you, they're also connected. So when that news happened, the dollar index as well went up. That's why there's an inverse relationship. So it's why if you know in terms of the connectivity between markets, then you will know also the market structure, where the direction is going to be, and it's just a matter of reacting to the trades. All right, I hope you enjoyed that. Please make sure that if you like these videos, subscribe the button below, press the subscribe button below, leave some comments, email us at estetraders@gmail.com if you have any questions, and I'm more than happy to answer them. And make sure to also to go through some of the videos that are available there for you. All right, guys, make sure to always follow your plan. Take care, be awesome, and happy trading. Bye now.